Let's move on now. It's not getting the buzz that cryptocurrency gets or even AI, but gold, yes, gold is hitting new highs. Investors, buyers, and sellers are all taking notice.
Gold is having a moment. The buying price of gold futures has hit multiple record highs this year. Since January 2nd, it's risen more than 14% in value. That's more than the Dow Jones, NASDAQ, and S&P 500, which have also hit record highs.
What is happening to the price of gold should be sounding alarm bells inside the Federal Reserve and other central banks. The best barometer for monetary inflation is the dollar price of gold. For a variety of reasons, gold keeps its intrinsic value better than anything else in the world.
Gold just hit a historic high, and it seems like everyone is racing to get a piece of the pie. In these uncertain times, with economic ups and downs, high inflation, and global tensions, gold has become a go-to investment for many people. It's not just something from the past. Gold is now seen as a solid way to protect your money. When the economy slows down, interest rates drop, or the stock market takes a hit, gold prices often rise. So, what's driving this surge in gold's value, and why are so many people buying it? Let's dive in and find out why gold is more valuable now than ever before. It's not just people, but some countries like China are starting to ditch their dollars and are stockpiling gold instead. So, why is gold standing out compared to other investment options? Let's break it down. Gold is often seen as a safe haven during times of economic uncertainty. Unlike stocks and bonds, which can be very volatile, gold tends to hold its value. When the stock market is all over the place, investors often turn to gold because it feels more reliable. For example, during financial crises or when inflation is high, gold prices usually go up. This makes gold an attractive option for people looking to protect their savings. Another big reason people invest in gold is its ability to hedge against inflation. When the cost of living goes up and the value of paper money goes down, gold usually retains its purchasing power. This is because gold is a finite resource. There's only so much of it, and you can't print more like you can with money. So when inflation is high, like it has been recently, gold becomes a more appealing investment. Stocks can offer high returns, but they come with high risk. The stock market can be unpredictable, and you can lose a lot of money if you're not careful. Bonds are generally safer than stocks, but they often offer lower returns. Gold, on the other hand, tends to be less volatile. While it doesn't pay dividends or interest, its price can increase significantly during economic downturns. This makes gold a good way to diversify your investment portfolio and balance risk. There are two main ways to invest in gold: buying physical gold or investing in gold ETFs, exchange-traded funds. Physical gold includes things like gold bars, coins, and jewelry. It's tangible, so you can hold it in your hand, and many people find comfort in that. However, storing physical gold can be a hassle and may require a secure location. Gold ETFs, on the other hand, are easier to manage. They're traded on stock exchanges just like shares of a company, so you can buy and sell them quickly. ETFs are more accessible to the average investor because you don't have to worry about storing the gold yourself. Recently, there's been a trend of investors selling off their ETFs and buying physical gold instead. This shift is driven by the desire for more tangible assets during uncertain times. Another factor boosting gold's value is the increased buying by central banks. Countries like China and Russia have been stockpiling gold to diversify their reserves and protect against potential economic sanctions. This has added to the overall demand for gold. For instance, central banks' gold buying nearly doubled after the start of the Ukraine-Russia conflict. They prefer gold because it's not tied to any one country's economy and isn't subject to the same risks as paper currencies. It's not just governments buying gold. Individual investors are also jumping on the bandwagon. In countries like China, More young people are buying gold as an alternative to traditional investments like real estate, which has become less reliable. In the US, retailers like Costco have started selling gold bars, and they've been flying off the shelves. This shows a growing interest in gold among everyday consumers who want to protect their wealth. Gold has a unique appeal that other investments lack. Its stability during economic turmoil, ability to hedge against inflation, and tangible nature make it a go-to asset for many investors. Whether you're a seasoned investor or just starting, gold offers a reliable way to diversify your portfolio and safeguard your financial future. Global political tensions and uncertainties also play a big role in driving up gold prices. For example, the ongoing conflict between Ukraine and Russia has created significant economic instability. In response, many investors have turned to gold as a safe haven. Central banks, particularly in countries like China and Russia, have increased their gold reserves to protect against potential sanctions and economic disruptions. Central banks worldwide have been ramping up their gold purchases, adding to the overall demand. This trend has been particularly noticeable since the Ukraine-Russia war started. Central banks buy gold to diversify their reserves and reduce their reliance on the US dollar. For instance, China and Turkey have been actively increasing their gold holdings to safeguard their assets against potential financial freezes. This large-scale buying by central banks has significantly boosted gold prices. Individual investors are also contributing to the rising demand for gold. In countries like China, young investors are increasingly turning to gold as a reliable investment. Traditional investments like real estate have become less appealing due to market volatility, making gold a more attractive option. Even in the US, retailers like Costco have started selling gold bars, and they're selling out quickly. This surge in retail interest highlights a broader trend of people seeking tangible assets to secure their wealth. While the current US economy might be doing well by some measures, there are still significant concerns about the future. Events like the COVID-19 pandemic, geopolitical conflicts, and potential economic downturns keep investors on edge. This uncertainty drives more people to invest in gold as a precaution against future economic shocks. Analysts believe that these underlying concerns will continue to support high gold prices for the foreseeable future. These recent economic factors, high inflation, geopolitical instability, central bank buying, and rising retail interest, all contribute to the increasing value of gold. As uncertainty continues to loom, gold remains a popular choice for investors looking to safeguard their financial future. To understand why gold is so valuable today, it's important to look at its historical context and economic role. Gold has been a symbol of wealth and a medium of exchange for thousands of years. Its journey from a basic form of currency to a highly valued investment asset is fascinating. Gold's story begins in ancient times. Early civilizations used gold for jewelry, religious artifacts, and as a form of currency. Its rarity, beauty, and durability made it ideal for these purposes. Gold coins were first minted in the Kingdom of Lydia, modern-day Turkey, around 600 BC, which marked the beginning of gold as a standard medium of exchange. For much of modern history, gold was tied directly to money. Countries around the world adopted the gold standard, where the value of their currency was directly linked to a specific amount of gold. This system created a stable and universally recognized value for money. However, the gold standard limited the ability of governments to print money freely, which eventually led to its abandonment. The US left the gold standard in 1971, allowing the dollar to float freely and marking the beginning of gold as a purely investment asset. Since the US abandoned the gold standard, the price of gold has fluctuated significantly but has generally trended upward. In 1971, gold was priced at around $35 per ounce. Today, it's worth over $1,900 per ounce. This dramatic increase reflects not only inflation, but also gold's enduring appeal as a safe haven during economic uncertainties. Historically, gold prices have spiked during periods of economic crisis. For example, during the 2008 financial crisis, gold prices soared as investors sought a safe place to store their wealth amidst the turmoil. More recently, the COVID-19 pandemic saw a similar rush to gold as markets crashed and economies shut down. Gold's value tends to increase when confidence in the economy wanes, making it a go-to asset in times of trouble. Charts show that gold prices often peak during economic downturns, recessions, and periods of low interest rates. For instance, the price of gold reached historic highs during the 2008 financial crisis, and again during the COVID-19 pandemic. These peaks coincide with times when the economy slows down, stock markets fall, and central banks lower interest rates to stimulate growth. Central banks play a significant role in the gold market. They hold large reserves of gold as part of their monetary policy. During times of economic uncertainty, central banks often increase their gold reserves to diversify their assets and protect against currency devaluation. For example, in recent years, central banks in China, Russia, and Turkey have significantly increased their gold holdings. This trend has contributed to the rising demand and value of gold. Today, gold is seen as a reliable investment. It's considered a safe haven that can protect against inflation and currency fluctuations. Unlike stocks or bonds, gold doesn't generate income through dividends or interest, but its value tends to rise during economic downturns, providing a hedge against financial instability. This makes it an attractive option for diversifying an investment portfolio and reducing risk. Gold's enduring value is also due to its physical properties. It doesn't corrode or tarnish, and its rarity ensures that it remains a precious and sought-after commodity. Even though new gold is mined each year, the total amount of gold available is limited, which helps maintain its value over time. The value of gold is influenced by various market dynamics, including supply and demand factors, economic policies, and geopolitical events. Understanding these dynamics helps explain why gold is considered a valuable investment now and provides insight into its future outlook. The future outlook for gold remains positive due to ongoing economic uncertainties. Analysts believe that the factors driving demand for gold, such as high inflation, geopolitical tensions, and economic instability, are unlikely to disappear anytime soon. As a result, gold is expected to continue to be a valuable asset for investors seeking to protect their wealth. So, if you're considering diversifying your investment portfolio, gold might be a smart choice. It offers a balance of stability and security that can protect your wealth in uncertain times. With its enduring appeal and increasing demand from both central banks and retail investors, gold is more valuable than ever. To stay updated on the latest financial trends and world news, make sure to subscribe to our channel. We provide insights and tips to help you navigate the complex world of investing. Stay informed, stay secure. Subscribe now.